Have you ever wondered why, when your bank account hits exactly zero, the bank doesn't just close it? Why do they keep the doors open, sending you automated emails about low balances, or better yet, allowing you to go into the negative? You've been told it's a service or a convenience, but in the world of high-level finance, there is no such thing as a free lunch. The truth is far more calculated. To the bank, your empty account isn't a failure, it's a specific type of financial instrument. Most people live under the delusion of the deposit myth. You think the bank is a vault where they take your $1,000, keep a little, and lend the rest out. While that's the textbook definition of fractional reserve banking, it's only the first floor of the building. The penthouse, where the real wealth is generated, runs on something called shadow liquidity. This is the secret system where banks treat your lack of money as a projected asset. Think about this. When you are overdrawn, you owe the bank money. On their balance sheet, that debt is an asset. But it's even deeper than that. Through a process of internal reclassification, banks can take millions of these uncollected funds and dead assets, accounts belonging to people with nothing left, and bundle them together. They then use these bundles as a form of collateral to borrow even more money from central institutions at near zero interest rates. Essentially, your empty account gives them the legal right to access more capital. They are literally printing opportunity off your poverty. It sounds impossible, right? How can nothing be worth something? It comes down to the way modern accounting treats risk. A bank would rather have 1 million people who owe them $10 than one person who owes them $10 million. Why? Because the risk is diversified. They know, statistically, that a percentage of those dead accounts will eventually be filled. They trade on that probability. While you're stressed about a $35 overdraft fee, the bank is using the very existence of that debt to back high-interest institutional loans that you will never see. This is the hidden architecture of the financial matrix. They've designed a system where they win when you have money, and they win even bigger when you don't. If you have a high savings balance, they pay you a fraction of a percent in interest while they lend it out at 7%. But if you have zero, they charge you fees that equate to an APR of over 1,000%, all while using the receivable debt on their books to bolster their leverage ratios. The psychological trick is making you feel like the broken one in the relationship. When you see that negative sign on your screen, you feel a sense of shame. That shame keeps you from asking questions. It keeps you from looking at the ledger. But once you realize that your empty account is a cog in a multi-billion-dollar liquidity machine, the shame disappears and is replaced by a cold, hard realization. The system isn't broken. It's working exactly as intended. The banks aren't just storage facilities, they are giant arbitrage engines. They are constantly looking for ways to turn static situations into dynamic cash flow. Your zero balance is static to you, but to them, it's a dynamic entry in a ledger that allows them to bypass traditional lending limits. By maintaining a massive database of these dead accounts, they can report a higher level of active users to shareholders, driving up their stock price and securing their dominance in the market. So, why don't they tell you this? Because the moment the masses realize that their debt is the fuel for the bank's wealth, the power dynamic shifts. You start to see that you aren't a customer, you are the product being traded in the back rooms of the global financial system. They need you to stay in that cycle of zero to negative, because a person with a perfectly balanced, stagnant account who never uses credit is actually the least profitable person to a bank. To truly escape, you have to stop playing their game of deposits and withdrawals, and start understanding leverage and liquidity. You have to realize that the digital numbers you see on your phone are just the surface of a deep, dark ocean of accounting tricks. The elite don't keep their money in these buckets. They own the buckets, and they profit whether the buckets are full or bone dry. The next time you see a zero on your balance, don't just see a lack of money. See the invisible threads connecting that zero to the massive vaults of the world's most powerful institutions. They are betting on your